Hello business entities, I am Sheikh Zaid and I'll be telling you all about UAE VAT. Why GCC countries are introducing value-added tax? Well, near about 80% of the GCC revenue is from the sale of crude, natural gas and other products of hydrocarbons. But a drop in demand, increased global competition and substantial decrease in the price of crude per barrel from $147 in 2008 to $50 today has forced the GCC countries to look for other sources of revenue. This is why VAT has been introduced, which is governed by the Federal Tax Authority. VAT at the rate of just 5% can generate near about 12 billion dirhams in the first year itself. This means revenue collected through VAT can be invested in new projects for infrastructure development and thus strengthening of the economy. VAT is a form of indirect tax in which the ultimate consumer generally bears the burden of tax. It is chargeable on the supply of goods as well as services. The business will act as a tax collector and pay the same to the government. VAT is charged on the value added at each stage of supply chain. Let's understand it with an example.
A weaver sells a piece of 1 meter cloth to the tailor at 1000 dirhams and charges 5% VAT. Now, the tailor stitches the cloth and sells the same to the retailer for 3000 dirhams, on which output VAT of 150 dirhams is being charged. The tailor receives a credit of 50 dirhams and thus pays a net VAT of 100 dirhams to the FTA. The retailer then sells the same to the consumer for 5000 dirhams, on which he charges 250 dirhams as VAT. He will now pay the net VAT of 100 dirhams to the FTA. Eventually, the accumulated tax being paid to the government is 250 dirhams, which is exactly 5% of the selling price to the ultimate consumer.
Exempting in rent, education and healthcare services, the government has tried to put the least burden on the general public. By charging VAT on telecom, electricity, water and food bills, the government has tried to bring about effective utilization of such resources. Overall impact of the VAT on household budgets is expected to be increased 1 to 1.5%. Luxury items like jewelries, watches, cars, smartphones, etc. are also taxable. Impact on property transaction will be limited to the wealthy, but the common man will be hit.